Today, the SEC claims Coinbase knew it might have been violating federal securities laws prior to the regulator's lawsuit. RFK Jr. says he wasn't an investor of Bitcoin, but CNBC has found financial records tell a different story. And Muneeb Ali, the co-founder of Trust Machines, breaks down what new confidence in crypto from big names in finance means for the digital asset industry. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Major cryptocurrency is pretty flat to start the week. Bitcoin continuing to show resilience, however. It dropped just a bit, trading around $30,300 as of noon Eastern. Ether rose slightly, trading around $1,870. And Polygon's MATIC token shot up nearly 3% following news that Polygon Labs' former chief legal officer was promoted to the company's new CEO. Okay, let's talk about the top stories. The SEC now claims that Coinbase knew it may have been violating federal securities laws before the regulator hit the crypto exchange with a lawsuit. In this filing from Friday, the SEC argued that Coinbase's actions clearly show that the crypto exchange understood that securities laws could apply to its listings years ago, but nevertheless made the calculated decision to take on this risk in the name of growing its business. The new document was in response to a previous Coinbase filing, which argued that the SEC did not have sufficient jurisdiction to bring its lawsuit, alleging the business operated as an unregistered securities exchange. A spokesperson from Coinbase pointed to tweets from Chief Legal Officer Paul Grewal, who said on Friday that the SEC, quote, ignores several things, including the agency's obligation to give due regard to the public interest and investor protection when they allowed Coinbase to list publicly over 2 years ago. He also argued that the SEC ignores the warnings of the Supreme Court against regulatory overreach in major questions reserved to Congress, among other examples. Next, Democratic presidential candidate Robert F. Kennedy Jr. and his campaign are trying to explain financial records uncovered by CNBC showing he invested in Bitcoin despite previous public statements claiming otherwise. RFK Jr. listed a brokerage account that held between $100,001 and $250,000 worth of Bitcoin as part of his June 30th financial disclosure report. That potentially contradicts his public comments at Bitcoin 2023 back in May, where he said he wasn't an investor. At the conference, he also said he would accept campaign donations in Bitcoin. The filing referenced in the CNBC report doesn't say when the Kennedy family purchased Bitcoin and how much they may have spent on their original investment. Now, hours after that story went up, the Kennedy campaign told CNBC that the Bitcoin investment was his wife's, but later said it was indeed Kennedy's investment and that the Bitcoin purchase was made after the speech in Miami and before the June 30th filing deadline. The chief ethics counsel for watchdog group Citizens for Responsibility and Ethics in Washington says the situation could represent a conflict of interest if Kennedy were touting Bitcoin on the campaign trail while his immediate family held the cryptocurrency. Finally, a new survey reveals 24 central banks will likely have digital currencies by 2030. This survey from the Bank for International Settlements was conducted late last year, and it pulls from 86 central banks from both advanced economies and emerging market and development economies. The BIS points out that the vast majority of central banks, 93%, have engaged in digital currencies in some capacity, with more than half reporting the emergence of stablecoins and other crypto assets as an accelerator. Another interesting point, 18% of central banks surveyed indicated ambitions to issue retail CBDCs in the near term. 16% said they will likely have a wholesale CBDC within the next 3 years. As for motivations, to make cross-border payments between financial institutions more efficient. And for retail CBDCs, respondents rated financial inclusion and payment efficiencies as priorities. All right, on to our main story. As finance titans like BlackRock and Fidelity have pushed again with their spot Bitcoin ETFs, many have claimed the move is good news for mass Bitcoin adoption. I spoke with Muneeb Ali, the co-founder and CEO at Trust Machines, for his take. Let's start with the institutions and the ETFs, because that is still top of mind for so much of our audience. How important is a Bitcoin ETF to you? How closely are you following this particular development? And do you think that after 10 years of attempts from the crypto industry that we might finally see one sometime soon?
Yeah, I think I've always held the view that it's a matter of when and not if. It has taken longer than I expected, right? So back in 2013, it felt like maybe in a couple of years we'll get one, and it's been almost 10 years. But I do think with every step we're getting closer and closer, right? So there's typically a review process, right? So if there is some sort of things that can be improved, people would generally go back, they will update their filing, and then they would just refile. And in my view, that's happening. And with every iteration, you're sort of like getting closer to it.
I've said this before here, but this idea that the institutions are coming now has really become this kind of meme in the crypto world. But in all seriousness, the thing that has really stood out to me more is given the regulatory scrutiny the industry has been under, and to have all of these institutions come out and raise their hand and say, hey, we think that crypto is serious and has a place in the future of finance. So what does the institutions are coming mean to you?
I think specifically for the ETF, the interesting thing to me is the biggest difference between the spot and the futures ETF is for the spot one, someone like BlackRock with their ETF will actually have to figure out custody of Bitcoin. So they actually have to go figure out, how to hold Bitcoin. They probably have custodians and so on, but that is actually meaningful, right? Like now you're holding the asset, you have to connect to the network. And once that happens, I'm more interested in the signal that it sends to other folks who would now look to an entity like BlackRock and think that, oh, they're doing it, they figured it out, so can be, right? So it just gives the more traditional financial institutions, I think, a level of security and safety that if top firms like BlackRock are doing it, then this is something that is maybe mature enough now for other folks to also try and experiment with.
And speaking of adoption, we could talk about the price performance of Bitcoin. I think that a lot of the sources I speak to day in and day out kind of operate under this understanding that Bitcoin is a great long-term story, but in the near term, it's a little bit messy still. It's going to be volatile for a while. It's still young. The industry is still building foundations. So price aside, what does actual adoption of Bitcoin look like right now? And how do you measure that? What are the metrics that you're looking at, or the indicators that you're looking at to track Bitcoin adoption?
Yeah, so I think over the last 10 years, I've sort of like developed this mental model that for whatever reason, it might be the Bitcoin halving, so it might be something else. But historically, this industry sort of moves in 4-year cycles, right? The Bitcoin halving sort of like marks the start. And every cycle, depending on which data source you're using for these numbers, I typically discount them down a little bit because a Bitcoin address doesn't really mean a user. Users can have multiple addresses, or even if somebody is just getting access to their first Bitcoin and they just tried it, I don't think that's an active user yet, right? So I typically discount down the numbers a little bit. So last cycle, you might have seen reports citing as like 100 million users. I really don't think we have 100 million users. Maybe I think I'll be happy with even 10 million actual active users who are in Bitcoin. I think we're roughly around that ballpark. But the cycle before, the high end of it might be like 10 or 20 million numbers you might have seen. But the reality might be one or two, right? Like in terms of how active they are, or how engaged they are, and so on. So I think, but there is a graph to plot here, like an approximate graph that we have gone from 1 million to 10, and a real 100 million or going into hundreds of million seems to be the next big step. And I think that one is critical because you can't get to 100 million or more without actually going mainstream, right? This is the place where the average internet users would actually onboard, and the technology would have to be simplified enough for them to understand it, to be able to easily use it. And I'm really excited about that phase, right? Like, because I personally might be an early adopter, but I think the technology is not really real until it reaches mainstream. And I think that hundreds of millions of mark, which is basically the next growth cycle, is where this can happen. And I think over here, one big thing is that Bitcoin in its current form, like just with the L1, might not get you there. So we need much more mature Bitcoin L2s, things like Lightning, Stacks, and others, where the L2s can become mature enough where people can do like fast and cheap transactions and use Bitcoin in many applications.
I do actually want to turn back to price now, because just looking at the price alone, I think one thing that many investors struggle with is the narrative. And I think that there are certainly cases where people are trying a little bit too hard to kind of match the Bitcoin narrative to something they already know. But Bitcoin, sometimes it looks one way, sometimes it looks another way. Last year, it traded in tandem with stocks. Now its correlation with stocks is at its, I think, August 2021 lows. So what is the investment case for Bitcoin? Like, what is the reason for investors, at least here stateside, to invest in Bitcoin?
Yeah, I think personally, like my investment thesis for Bitcoin primarily is driven by the hard money use case, right? Like it's a fixed supply asset. It's like gold, but the applications that you're able to build around Bitcoin actually basically make Bitcoin more useful. So think of this as like if Bitcoin is like digital gold, just like with gold, gold has use cases. Like, it is considered valuable because you can make jewelry out of it, or people can use it in many different ways. And that actually does add more value to gold. Similarly, building these applications, some of these are purely financial applications. So if Bitcoin is a financial instrument and there's better financial tooling available around Bitcoin, it just makes Bitcoin more valuable. Right. So in that sense, like I don't view this as a fundamentally different investment thesis personally. Like I hold Bitcoin, and I think my thesis remains the same. It's not that suddenly Bitcoin is going to turn into a technology platform. That's not what Bitcoin is. But I think what's happening with these L2s and ordinals is there is better tooling available that makes Bitcoin a more efficient financial asset. And Bitcoin goes from just being something that is passive and cannot be deployed in a decentralized way to into liquidity pools and other types of financial instruments, to those things being possible in Bitcoin that actually grows the Bitcoin economy, grows the size of the pie for the Bitcoin economy, and that's a very healthy thing.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.